Hey everyone, Couch Investor back to the second video of this evening session. So we first covered PayPal already. If you missed that video, it's going to be in the top right corner. In this one, let's talk about Airbnb. Airbnb has a double beat yet again for this quarter, but the stock is down after hours. Why is that? Well, like I said before, guidance is of extreme importance, especially right now, and guidance here was a small miss. Now, with regards to Airbnb, there has been a lot of noise throughout the years, whether it's horror stories on X, Reddit, you name it, or it's the super high cleaning fees, or it's the regulations in New York, in other states as well, that could hit and will probably hit Airbnb's business. Now, they did mention and touch on the regulation part in their shareholder letter, which we're going to touch on later on, but I just want to repeat myself again and again. Airbnb operates globally. Just because you hear things coming out of the United States does not mean that this is 90% of Airbnb's business. No, Airbnb's business is a global business, and as they continue to expand internationally, they will get less and less affected from things that happen in the United States. Of course, US, Canada is a very, very lucrative market for them, but we need to stop looking at Airbnb as just an American company, because it's definitely not just an American company. It's a global one. So let's have a look at the state of the stock. First of all, at the time of making this video, the stock is down 2.88%. It fluctuates between 4 to 2. So we'll have to wait and see what happens when the market opens. But yes, currently the stock is cheaper than what it's mean since it went public. Yes, it is still more expensive than your usual travel stock, I should say. But in my opinion, you're buying here an extremely high quality business with great management. That said, they still have some work cut out for them. But overall, right now, yes, the stock is much cheaper than before. Now let's start with the hosting, because I do think it is important to understand how much money people on Airbnb actually make. So active listings grew yet again 19% in Q3 relative to Q3 2022, and we continued to see double-digit supply growth across all regions and market types. In Q3 alone, Airbnb hosts earned more than $19 billion. Again, I'll repeat that. Airbnb hosts earned more than $19 billion. And it's very, very important to understand that as people start to notice that you can actually make some money from that, of course, we're in an environment where sometimes Airbnb homes aren't profitable at all. But again, it's a global company. In some region, it's still very lucrative. And when you see that number here, maybe you'll start to think twice about hosting. And speaking from a guest perspective, more supply will probably mean that there'll be more competition, and so things could get cheaper for you. Continuing here now with the monthly stays. So they made 3 important steps to help hosts make longer stays more affordable for their guests. So first up, we significantly reduced the guest service fee after the 3rd month. Second, they introduced pay by bank for guests in the US. And third, they made it easier for hosts to add monthly discounts. Since then, they've seen the positive trends, with nights booked for stays of 3 months or longer in Q3 increasing almost 20% year over year. Additionally, the percentage of new active listings that offer a monthly discount increased from approximately 22% to over 50%. Again, this is a company that makes changes all the time. And for those that are interested, the Airbnb winter release for 2023 will get released on November 8th at 9 a.m. EDT. And so business and financial performance. For Q3, nights and experience booked increased 14% year over year, 32% year over 4 years to reach 113.2 million. And GBV, or gross booking value, reached $18.3 billion. That's up 17% year over year, or 14% ex FX. And it's up 89% year over 4 years. And with regards to the nights and experience book, that also beat the estimates. Now, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. And for support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, touching on ADR, supply, and regulation. So ADR was $161 in Q3, representing a 3% increase year over year. Now, excluding the impacts of FX, ADR would have increased less than 1% from the same quarter last year. And on an FX neutral basis, Q3 ADR was down in North America and Latin America, but up in EMEA and Asia Pacific year over year. As for supply, they ended Q3 with their highest number of active listings. For the second consecutive quarter, active listings grew 19%, as I mentioned before. They saw growth in supply across all market types in Q3 compared to a year ago, including both non-urban and urban supply. They also saw an increase in supply across all regions in Q3 compared to Q3 in 2022, with the highest growth rates in Latin America and Asia Pacific. And now, as for regulation, in September 2023, Local Law 18 went into effect in New York City, resulting in a de facto ban on short-term rentals. We believe the city's short-term rental rules are a blow to its tourism economy and the thousands of New Yorkers and small businesses in the outer boroughs who rely on home sharing and tourism dollars to help make ends meet. Prior to September, New York City represented approximately 1% of Airbnb's global revenue. Approximately 80% of our top 200 markets by revenue already have some form of regulation. They add this just so investors are a bit less stressed. And so, now looking at the major numbers here, so revenue came in at $3.4 billion, that's up 18% year over year, or 14% FX neutral basis. As for net income, that's $4.4 billion, $1.6 billion ex-VA, $4.3 billion ex-FX. And you might say, how can net income be bigger than revenue? Well, good question. And the answer here is because they benefited from a one-time non-cash income tax benefit of $2.8 billion. Then adjusted EBITDA $1.8 billion increased 26% year over year, or 20% on FX neutral basis. Net cash provided by or used in operating activities, $1.3 billion. If you compare it from last year, same quarter was $964 million. And in 2019, well, it was used $43 million. Free cash flow this quarter, also $1.3 billion, compared to same quarter last year of $958 million, or the same quarter in 2019 was basically negative $75 million. And this basically allows them to have stock-based compensation, but also reduce the share count through buybacks. And so as of September 30th, 2023, they had $11 billion of cash, cash equivalents, and short-term investments and restricted cash. In that quarter, they also repurchased another $500 million of their Class A common stock. They still have $1 billion left. As for the outlook, and this is what was a bit lower than expected, so for Q4, they expect to deliver revenue of $2.13 to $2.17 billion. Expectations were just, I think, $2.18, $2.19 billion, so a small miss there. They anticipate that our implied take rate, defined as revenue divided by GBV, in Q4 will be slightly higher than Q4 2022. They also say here that Q3 was a record-breaking summer travel season for our business. We are seeing greater volatility early in Q4 and are closely monitoring macroeconomic trends and geopolitical conflicts that might impact travel demand. We currently expect our nights booked growth in Q4 to moderate relative to Q3 2023. Meanwhile, we expect ADR in Q4 to be stable to slightly up compared to the same period last year. Now, as for profitability, they expect a record high fourth quarter adjusted EBITDA, and they also see here they expect an adjusted EBITDA margin for the full year 2023 that is approximately 150 basis points higher than full year 2022. And so moving on to the graph, of course, we're back down now. So this week currently will probably be another red candle. Look, there is that support-ish at around $100 to $105. If something extremely bad gets mentioned during the earnings call and goes back down, great, I'll have to pick up more shares of this great company. But currently, we're probably going to hover around, again, depending on what gets mentioned during the earnings call, hover around $115 or so, which was also the price we've been at the start of the year for a couple of months. So maybe it can form a base around that price. RSI still pretty neutral. So that will be it for this video. It's a good quarter for Airbnb, yes. Too bad for that weak-ish guidance, but to be honest, I mean, if you've been following the macro news, etc., it was to be expected. But overall, profitability-wise, this is still a great company, great execution, great management. What else can I ask? Maybe cheaper shares. That's the only thing I can ask. But hey, that will be it for this video. Do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.